Yo, how's everyone doing? Welcome to another episode of Simply Bitcoin IRL. Today we have a very special guest. We have James Check in the house. His Twitter handle, he goes by the name of @_checkmatey. I'm sure you guys have seen him around. He did some incredible, he's done the podcast circuit and he's had some incredible episodes on other podcasts. So very excited to have him on the show today. He is here it is, the founder and lead analyst of Onchain.com. Incredibly awesome platform. It's helping investors navigate Bitcoin's volatility like a pro. So we're going to get into just what is the market cycle expectations, all of that good stuff. But before we do it, I do want to give a very special shout out to the Bitcoin company that makes this show possible. Of course, I'm talking about Bitcoin Well. Bitcoin Well is the best place to build your automatic self-custody Bitcoin stack. What does that mean? That means that you can't buy Bitcoin on Bitcoin Well unless you're going to take self-custody, which perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Go check out bitcoinwell.com today. You could type in simply BTC and you get some points, you get some stuff. It's really awesome. Anyways, go check out bitcoinwell.com today. No more delay. I do want to bring up James on stage. James, thank you so much for joining us, man. Like I was saying in the beginning, just huge fan of the podcast appearances you've done so far, and of course your proof of work that you post on Twitter as well. So appreciate you coming on the show today.
Thanks for having me on, mate. Should be a fun discussion.
Absolutely. All right, man. So let's jump straight into it and kind of address some things that I think are interesting. So first, I'm going to start off with, and this is what's popular these days, this is what people are talking about, is the power law. And I know that you are not a big believer in the power law. And I was just wondering, like, why is that? Like, and again, this isn't just some random, Bitcoin pleb from Twitter. This is someone who dedicates his life to, making a living off Bitcoin analytics. So what is it about the power law that you don't like?
Yeah. So it's not so much I don't like the power law. I don't like the way that the power law is being sold and the implications from a more social perspective. So look, I'm an analyst. I do a lot of work in terms of trying to understand the mechanics of what the market's doing and all these types of things, right? And there's a lot of statistics and mathematics and all sorts of things we can throw at it. As with all things, some models are useful, right? Most are, they're all models. We have to understand that they're a simplification of the world. And, with the power law, it's very similar in the same vein as stock to flow, where it's basically a model that just says up only. And in many ways, it's like, okay, that's kind of cool. It's up only. But the problem is that there's a lot of people who don't do the proof of work, right? They look for analysts and people who've done a lot more work than them. And again, I'm not dumping on the power law, because there is a lot of work that's gone behind it. There's no doubt about it. Quite different to the stock to flow model, where there was very little work done behind it, and the work that was done was proven to not be very good. But my fear is that the outcome could be the same, where you end up with a situation where people they make decisions because they think that the model is going to be preordained to happen, right? In some ways, it can be so simple that it becomes dangerous, if that makes sense. Look, it's just one of those things where it's more so the way it's being sold. Now, there's some interactions that I see where it's a bit more constructive and they're talking about the mechanics of how the model works. There's some other interactions where it's like, no, it's preordained. This is what's going to happen. It's divine from God. Number go up. It's going to follow this line. And the concern of that is that people are going to make decisions that in 2021 blew them up, right? They went mega long at the top because the stock to flow model said we had to go from 60 to 100. And we went to 29, right? And a lot of people lost a lot of money there. And that's the part that I'm concerned about, because I had to go through a big process of helping rebuild, right? Because a lot of people put stock to flow in the bucket of on-chain, right? This is a big part of it. They put, even though it's not on-chain data whatsoever, there's nothing about it that's on-chain. It's like some simple statistics. A lot of people bundled the whole on-chain industry in there and said, oh, look, it's all voodoo, it's all bullshit. So I went through a very, very long process of rebuilding and showing people, hang on a second, there is actually value here. And that's why I'm saying with the power law, there could very well be value. Just be really careful how you pitch it, because that's what catches people and that's what can cause damage.
Gotcha. Okay. And then what is it like? And again, I don't have a mathematics background in any of that stuff, but just to add to your point, that was the general, and it's something that people forget to understand about markets, is that it tends to do the exact opposite of what the
Yes.
majority of people think is going to happen, right?
Yes.
It's like the psychology of it catches you every time.
And it comes actually from it comes from human psychology. We are trained from a very, very early age to avoid risk. Your mum says, don't fall off the swing. She says, don't eat that thing. Don't put that rock in your mouth. There's all these things that we're trained to avoid risk. And human beings, we are not good at markets by default. The default position, you probably experienced this, right? You buy Bitcoin, the moment you buy it, it sells off. You hold it, and finally go, oh shit, it's going lower. And you just you panic sell, and then it rips all the way back to your cost basis. You buy it again, it sells back. We are designed to lose in markets. And that is why when everyone's doing the same thing, markets do not adhere to your expectations. And in many ways, the challenge with power law and stock to flow, the input model that they're using is time, right? Because stock to flow, we know that Bitcoin's supply curve is preset. So we essentially, by modeling Bitcoin's price by supply, you're actually modeling it by time. And the power law is basically saying over time, it's just going to go up. And the problem is that that's not necessarily true. What if Bitcoin doesn't go up? What if it goes sideways or up or down or left or all of these things? Time is not an indicator that Bitcoin's going to go up. And it's lazy thinking. And that's my concern with it.
Yeah. And I just wanted to ask you again, James, right? And again, I don't have the background that you do, but the vast majority of all right, hold on. Am I back? All right, sorry guys. There's a thunderstorm outside, and it seems like it's making things go crazy. I am back. Okay, so James, going back to what we were saying and what you responded. This is the consensus that I'm seeing this trend. Okay, so last trend it was 100K for a fact. This trend, because people have PTSD from the last cycle, I'm seeing a general consensus of an underestimation of the potential Bitcoin outcome in 2025.
Diminishing returns is consensus.
Correct. Diminishing returns. So, and that is, I think it's taken a lot of light out of people. Like it's kind of dismotivated.
People are leaving because they're bored, and we're 5% off the all-time high. It's amazing. It's actually an amazing phenomena, but this is very real. Boredom shakes out as many people as downside. People just get bored and they eventually go, it's not going anywhere. It's topped out, and they walk away. But what's really interesting is this current market structure we're in is what I call quiet and trending. It rallies and it goes sideways. It rallies, it goes sideways. It's beautiful stair-stepping patterns. This is an extremely constructive bull market. Like this is what it looks like when you're building support on the stairs higher. In 2021, if you can think back, we just rocket ship from 10K all the way to 60. It just went vertical. There was no support there, and we filled the whole thing back in over the next year and a half. So we're building a very strong, stable, quiet and trending price action. It's really, really healthy. We're building a foundation for the next leg, and people are getting shaken out because they're bored. It's an amazing. People are always wrong. This is how the markets work. It's a beautiful thing.
Yeah, it is a beautiful thing, and I think if you wreck yourself a couple of times.
Oh yeah,
it's my 8th year. No, it's my 8th year in Bitcoin, dude. Like you go through some stuff, right?
Oh
you experience some things, emotions,
and you can't learn it by reading it. You have to actually lose the money. You have to lose the money. You have to buy at the wrong time, sell at the wrong time, pay your tuition. Otherwise, you just don't learn it.
Dude, it is unavoidable. It is unavoidable. Like you have to go through it. It's part of the process,
and it's good for you.
Yeah, I would say it's good for you, and it gives you your stripes as a Bitcoiner for sure.
Oh, yeah.
So look, I agree. I can't come at it from a level of expertise, right? I'm a media guy, but I can come at it from a level of I've been in here 8 years. My intuition is telling me, red light, just because I've seen this play out before, and it's exactly what you said. The narrative this cycle. And I saw American HODL talk about it the other day, is the diminishing returns cycle. So the diminishing returns narrative, Bitcoin's going to 2x from here. That's it. The law of big numbers. Why is the law of big? Isn't it theoretically harder for Bitcoin to 2x from here than it was for Bitcoin to 2x from 10K to 20K. If that's the case, like if it takes a lot more money for Bitcoin to 2x, then wouldn't diminishing returns come into play? Like, is it diminishing returns compared to the last cycle, or are you just not a fan of diminishing returns at all whatsoever?
No, it's a great question. And it's not so much that like the law of big numbers is true, right? So as an object gets larger, it's literally got more inertia and weight. It's harder to move. So let's think about who is going to be selling this cycle, right? There are going to be people like yourself who've been in the market for 7, 8, 6, 5 years, long enough that their Bitcoin nest egg has gone from a couple of $1,000 on the side. They've done that every single week, every month. They've kept chipping away and keep dollar cost averaging. It's if we go up another 5x, 2x, we start talking about like, hey, I could actually finance that house now that I wanted, or I could actually like change my life. I could put my kids through private school. The market is going to have to finance Bitcoiners' lives, right? Which is fine because it's about buying an asset early. So the asset gets bigger, but also it's going to have to finance everybody's life. That's kind of how markets work, right? Some people buy stocks early, they ride the wave, and then the market, when it goes to an IPO, right? That's when you get the financing of those people get an exit, and they obviously do something with that cash. So there's this process of the market gets bigger, but simultaneously the money coming in also gets bigger because we're talking about. I mean, I did a report the other day. You may have seen that Wisconsin. I think it was Wisconsin pension fund, and they allocated $180 million, which for you and I, $180 million, you're like, shit, that's a lot of money, right? But to these guys, it's 0.1% of their portfolio, zero point 0.1, right? We're talking about nothing. This is what they just like tap a toe in the water. So, and they're expecting to get up to like 1, 2%. And that's one institution, one single institution putting 0.1% is $180 million. But here's the other crazy thing, $180 million, right? Relative to Bitcoin's 1.4 thousand million, right? $1.4 trillion market cap is enormous. So there's this like, it does get bigger over time. It does take more money to move, but simultaneously we have bigger money coming in. And that's where for me, I really look at like, I don't have a view on whether we're going to have necessarily diminishing returns, higher returns, whatever it is. When I look at the market, I'm like, okay, just let's have an assessment where we are right now. On the hard right edge, how is the market performing? And right now, we're a stone's throw from all-time high. We haven't had a 20% correction since the FTX bottom. People are bored and eating themselves on Twitter. And it's some of the healthiest price action I've ever seen for Bitcoin ever. So, and so far, all the metrics I look at where I'm trying to look for things, what I call top heavy markets. And this is what my audience will often hear me talk about. Top heavy markets when too many people buy too many coins at too high of a price. And that's what precipitates a bear, right? You get markets sell off and they start to panic. I haven't seen any of those picking up yet. So essentially we're at this point where it's like, it looks really, really healthy to me. And, there's a whole stack of people who are quitting and leaving because they're bored and they think it's over. And yet it looks about as good as it's ever looked.
Yeah, and I agree with that. I agree with that. I feel what I felt before heading into 2021. We had that like, kind of like this fake pull up. I think we went from, it was like 3.5, we hit 14, and then we went back down. What I think it was like what was it, like 6 or 9 or whatever. That wasn't 21. That was before. But yeah, it kind of reminds me that was the mid-cycle peak. And I'm like, okay, this is the mid-cycle peak. I was actually concerned that we were going up at the pace that we were going up. And I was like, things need to cool down. Like for
2019 was formative for me as well, because that was the first moment I realized, holy shit, I didn't buy anywhere near enough. It was that first like moment where you're like, oh man, this thing, when it runs, it goes.
Yeah, it goes, right? So yeah, man, I feel, I completely agree. I think fireworks await us. It's just a couple more months. The more it crabs, the longer it crabs. It's a good thing because it's building this. Yeah, it's building this base 100%.
And you may find, like, I often encourage people to like observe your own psychology, because really markets will do their thing. It's like the tide. You can't wish the tide was different. The tide just is. What you have to do is learn to like observe how you respond to that tide. Right. So as we sideways crab, for me, something I've observed for myself, It's $100,000, right, for Australian Aussie dollars. So that's the current price level. Anything that goes under 100,000, I've like acclimatized myself to be like, well, okay, I'm never getting 80 or 60 ever again. That's gone. So I've acclimatized myself personally. So if it goes below 100, I'm in stack mode. If it's above 100, I'm just going to wait and just let it see if it comes back down. So like I'm getting to the point where I've acclimatized myself to this new level, and that's what crab markets do. Some people, like I'm experienced in markets, so I can probably get to that acclimatization sooner. Others, it takes them a long time, right? But if you've got these pension funds who are allocating for the first time, $100,000 Aussie is the first price they're buying. That's their first level, right? So they're going to be very sensitive to it, but over time they're not going to care because market's going to go higher and they're eventually going to be up, and 100,000 is going to seem like a dream, right? So it's
Yep.
very interesting dynamics.
Yep, I 100% agree, man. Man, you're making me bullish. You're making me bullish. Okay, so I do want to pull this up because it's actually this tweet. I don't want to say it went viral, but let's say it got attention. And I said the Chinese mining ban robbed us 100K last cycle. Still don't see enough people talking about this. And what's interesting is you commented the Chinese mining ban had nothing to do with it, in my opinion. The 661K spot bid from GBTC went to zero in February 2021, and every man and his dog were levered long at the top. The market was already top heavy and bear ready well before China banned mining. So,
Yep.
and you're looking at this and you're like, okay, there must be some type of correlation, but you're basically making the argument that this is a coincidence. The
Correct.
hash rate.
Correct. So markets will often look for just like a catalyst. Now, you'll see this in financial media. In financial media, and this is the same in stocks and Bitcoin and everything, at the moment when a market sells off or rallies, the media company will go and get their intern and say, right, you need to go and find out why this happened and just put a story out. And you'll see that every media headline will just be like, oh, look, Elon tweeted about this thing, or, oh, look, China banned mining, so market sold off. They will find the closest and easiest, most tangible thing because it will make you click on the article, right? But they're not doing the actual, like, they're not doing, there's not an analyst sitting there analyzing the market and being like, oh, here's the actual mechanics. So if we go back to that first 2021 peak, let me just describe what was really going on. I mean, as I said, we went from 10K to 64 in like 4 months, right? It was just an absolute rocket ship. Now, the actual all-time high, and I believe that first all-time high in April was like 64,000 when Coinbase did their direct listing. That, in my opinion, was the market all-time high. Even though we set a higher price one later on, that was a real false top, and I can talk about that later on. But if I describe the mechanics, we saw what I call the on-chain top in about January. And the on-chain top is when a lot of metrics signal that the old hands, right? Long-term holders, the hodlers, they sold an absolute gargantuan amount of coins on the rally higher from 20 all the way up to about 60. But January was the all-time high. And that's when we had an initial correction from like 42 to 29. And then we bounced higher from there. But during that process, GBTC, right, it was trading at a premium. So people may not know that this existed, but GBTC, before it was an ETF, was what's called a closed-end fund, which means coins can go in, but they can't come out. Now, at the time, it traded at a premium. So you could send one Bitcoin in, sell it for the equivalent of like 1.1 Bitcoin in 6 months' time, cash out, and then use that money, buy 1.1 Bitcoin, and then get, you just keep adding 10% or whatever the premium was. You keep compounding those returns. A lot of firms did this with leverage. So they borrowed money and then they borrowed Bitcoin to do this GBTC trade. So 661,000 Bitcoin got sucked out of the supply. That's a huge amount, by the way. That's like, I mean, that's why people are like, oh, these ETFs are brand new. It's like, nah, we've seen these ETFs before. GBTC was the ETFs back in 2021. This is the second time we're watching this movie. So all those coins between like December and I think it was February, all those coins, 661,000 flowed in. They can't come out, but that's a huge spot bid. And that went to zero. The moment that the GBTC went from a premium to a discount, people were no longer buying the coins and sending them in. So that enormous bid just eviscerated, gone. So suddenly the market's got to deal with the fact that it's like, well, not only do we have no more spot bid, but we've kind of teleported and built no support on the way higher. And then you've got a whole lot of people who are levered up and now shitting themselves because their leverage position has gone from a premium to a discount and they're about to get blown out. Now you've got a problem. So then Coinbase, right? They had their direct listing. And when I say top heavy, what I mean is too many people bought too many coins at too high of a price. There were a lot of people listening to stock to flow specifically and believing that we were going to 100K, and they had their first ever cost basis at 55, at 60, at 61, 62. And we can see it. The moment that the price sold off after the Coinbase IPO in April, the market was what I call top heavy. Unrealized losses ripped higher, coins in loss went up. Like we can see that there was a lot of people who are very price sensitive with a very high cost basis. And those people are also inexperienced. A lot of them is their first cycle. This is what tops look like. Hodlers have left, new money is in, and new money is in a really unfavorable position, and then the market sells off. Then in May, we had the Chinese mining ban, and the market, all it needed was a tiny catalyst to just set off the match, right? That they'd already built the fireplace. The fire starters are in there. It's, they've poured petrol on it. That was just the final match that just set the whole thing off, right? So did the match create the fire? No, the fire was already there. It just needed the spark.
That is fascinating, man. Bro, this is great context, and I love the way that you describe essentially the psychology and who the investor is that's participating at that time in the market. Now, my question to you, James, is what data are you seeing? Like, this is data from your website. Are you releasing a newsletter? Like, where are you getting this from?
Yeah, so my website, charts.checkonchain.com, but you'll find it at checkonchain.com. That's actually been around for a long time. I think it's one of the oldest on-chain websites because I started building it back in 2018. I think it's like block height 538,000. I've got it down the bottom of the website. And I started checkonchain.com because I became fascinated with on-chain data. So I don't pull my own data. I actually pull it from others. Researchbitcoin.net has been fantastic. So he's recently open sourced his API. So I've been pulling a lot of his on-chain stuff. But essentially, I make the data free, and that's the big thing for me is I want to make the charts free, and that's on-chain came from an open source world. The website was my project, my personal project to learn Python and get off Excel because I used to be an civil engineer. I use Excel for everything. And I got sick of downloading CSVs, uploading them, redoing my charts. It was a pain in the ass. So I was like, okay, I have to learn how to use Python now. So Check on Chain was my personal project to teach myself Python. And it's essentially just been chugging away, building up ever since, right? So the newsletter we've got, again, checkonchain.com, that's essentially where the way I view it, the charts I like to make available because I want Bitcoin is open source. I love the open source nature of it. On-chain has always been an open source kind of discipline. And some people, right, this is the crazy thing about it. We as like the plebs know so much more about on-chain data than the institutions. They are so far behind. They'll get there. But this stuff is just amazing because you can see when people are in too much profit, when they're getting flushed out, when they're buying high, selling low. You can see what people are doing. It's like having X-ray vision where you get like 30-40% of the cards on the table. You can see what's going on. So I make the charts free, but my time doing the interpretation, my time doing the analysis, my proof of work, that's what I charge for essentially, which is in my newsletter. And again, it's not expensive, right? It's $20 a month, but the idea is, that's my time to analyze, assess, and kind of go over what the market is doing, use the tools, show people and teach people how to use them. That's the general framework, right? So I'm a big advocate for value for value. So the charts are free. They'll always be free. But the idea is that the interpretation of my time doing the work, that's what's valuable. And that's what I charge for.
Gotcha, man. First of all, fascinating, and shout out to your proof of work, man. This is incredible stuff. This is fascinating to me. I always thought, that it was basically impossible to really understand what's going on. But I guess you're making the case that it's not all of it of what's going on, but a percentage. You can feel very confident in terms of because could you walk people through in case they don't know what is it how could you tell by the data? Is it just like blockchain information you're seeing at old addresses move their Bitcoin, receive Bitcoin? Like, how are you getting to these conclusions?
Great question. So let me bring it back to my civil engineering days because I think this can help people connect the dots on how what I used to do is called geotechnical. So I used to design stuff in the ground, right? Basements, foundations, tunnels, mines, all that kind of anything that's excavation. I was the one who was designing the hole, essentially. Now, when you're doing a project like that, right? That one of the jobs I worked on was a train station, and we had to excavate a 50 by 50 meter square footprint, 30 meters deep. Now, that's 180 million kilograms of material. It's a lot. And in order to design that, I have to design off 5 boreholes, which are about this big, 50 mil diameter. So you get 0.0039% of the ground that's there, and you have to design everything. So I'm very used to dealing with risk, uncertainty, and incomplete information. And the cool thing about that is you have to take those 5 boreholes and then go back and go, okay, I've got sandstone here, I've got clay there. What like a million years ago, how did that sandstone get there? And if that sandstone got there via mechanism A, B, and C, what were the tectonics like in that time? Am I expecting there to be faults and fractures and cracks? You have to use like the world and all of the information you possibly can, right? I use mappings from inside the tunnel they excavated in the 60s. And you start looking and say, okay, well, there's faults at this kind of regular intervals and all that kind of stuff. So you have to use lots of inputs from different types, photographs, boreholes, soil sampling, history books, all sorts of shit to compile a thesis. And then your thesis not only has to be like robust enough to design off, the thesis also has to be flexible, because if you're digging down and you're expecting sandstone and you get clay and suddenly your whole building's going to fall over, then your design's shit. You have to design knowing that these variabilities can come in. And markets, this is markets. This is what markets do. They are entirely variable, right? So now bring it back to the world of Onchain. Hopefully that kind of sets the scene for how I personally ended up doing this particular field of work. In the world of on-chain data, Bitcoin is just a big database, right? Every 10 minutes, we do an append only rows to the spreadsheet. We just keep adding more rows and you can't change everything that's above. What we're really looking at, and we're not doing stuff like chain analysis where you're saying, oh, this is this particular entity and this is this particular guy. We'll look at exchanges and stuff, but it's not really useful in my opinion. For the most part, what I look at is I call them cohorts. You'll often hear long-term holder, short-term holder. Really, really clean way to do it. It's basically if you held your coins for 5 months or more than, right? Hodler, smart money, or hodler and speculator. Simple way to think about it. Now you can look at, okay, how many coins do they own and how many coins are they spending in aggregate, right? But not only are they spending or holding, are they in profit or in loss? Because think about, what does a top actually look like? Let me describe the mechanics of a top and the mechanics of a bottom, and you'll probably be able to see why this data is useful. At the top, what do you want to see? If you're looking for an exit signal, what are you looking for? The smart money who bought down in the bear market and are in a huge amount of profit start moving their coins. They start selling, right? Because they're taking chips off the table. It may not be you selling, but there are hodlers who are selling. So what happens there is that old money, who's firm-handed, high conviction, coins are in cold storage, they're up 400%, 500%, 10x, and they start to take chips off the table in increasing size. Who's buying those coins? Well, not people who bought in the bear market, people who heard about Bitcoin from their friend who's getting rich or their Uber driver. The more experienced people are selling coins in profit to the less experienced buyer. Now, what happens when a top starts to form? Those very inexperienced buyers have seen their 50% profit suddenly go down to a minus 50% very quickly, and they panic. They start bailing out, and that sell side cascades, and you get this cascading of a bear. So what I'm looking for is who owns the coins, who's holding them, who's spending them, how long have they held them, are they in profit or loss, are the coins that they're, when you're looking for a bull market dip and you want to actually add to your position, the dumb money always buys high, always. But then they also sell low. And what you're looking for is, I want to see when the smart money sells in a profit, the dumb money buys it, wait for them to sell in a loss and capitulate, and then you buy that dip. And that's exactly what we saw at 57K. I put out a newsletter on it for my subs, because that's essentially the moment where you're looking at like a micro capitulation. And as we said at the start of the call, people are always wrong. And on-chain data helps you visualize the crowd. And when you can see the crowd, you can start doing the opposite of what the crowd is doing, right? You can see when the smart money starts doing something, and then the crowd starts behaving a certain way, and then you act accordingly. So, it's a good way to improve your DCA. It's a good way to just like understand where cycles are. And all the exact opposite is true in a bear market. At the bottom, what do you want to see? All the speculators are gone. There's no fast money. They're gone. The only people left are the hodlers, and they can carry enormous unrealized losses. So I look for the point when the hodlers are carrying like 50% down, because when they're that down on their position, everyone else is gone. No one else can stomach that kind of a drawdown. And the Bitcoiners, they're the ones who establish the floor. So that's a bit of a view on what this data is actually doing. It's fascinating. Fascinating field.
It's super fascinating, and I I love that we're having this conversation. How is it enough information to trade? Like, is this enough information to give you an edge? Like, a lot of the things that Bitcoiners have gone through, and I'll speak for myself. Like, I'm a hodler. Like, I don't trade. Like, I've bought the top and I've bought the bottom every single time. Not because I've known it was. I mean, you start to get that the intuition start to build, and you intuitively start to know, like, I know for a fact, like when we were at like 15, 16K, I couldn't have shown you to any type of data whatsoever. But, you're like, okay, like most likely we're not going any lower than this. And then you're like, fuck, I wish I had more cash.
Well, and so the thing about Onchain is those intuitions, the Onchain, and like anything, right? There's 1,001 technical indicators, but people still use the RSI and the MACD. People have just like the crowd favorites. Onchain's the same. There's 1,001 metrics, and I'll use a whole bunch of them, but there's only like 10 that the average guy needs to really like wrap their head around. They're all interrelated, and it gives you so much of a benefit. So those intuitions, you can just like consult a handful of metrics. Okay, it feels like there's no speculators left. Let me just go and check and see whether all the short-term holders are gone and all the long-term holders are holding fat losses. Yeah, that looks like seller exhaustion. Looks like a bottom. So it adds that conviction. Now, and I can see a bunch of people in the comments like, I'm also a hodler, right? I'm a buy and hold. However, at the same time, I look at the way that Michael Saylor, for example, right, when he's taking on $1 billion loan and he's buying all this Bitcoin at 50,000, and I commend him for buying the top. But if he had just bought near the short-term holder cost basis, do not buy unless short-term MVRV is below 1. If he had done that, his position would be so much better. And like as a hodler, you want to increase your stack. Now, what's also I think is, and our tagline is, we want to be like your Bitcoin personal trainer, because even as a hodler, volatility is hard. Because just envision for a second, we wake up tomorrow, Bitcoin's at 100K or Bitcoin's at 40K. In both of those instances, the reaction is going to be the exact same from most people. Holy shit, what happened? Right? And they're going to want to go and find out why this happened. So volatility creates uncertainty, because some hodlers are going to be like, you know what? I do need to, at some point, my wife is nagging me, or I need to buy a house, or I need to put my kids through school, whatever it is. There's going to be some life reason, because Bitcoin is your savings. What do you spend your savings on? Anything you fucking want, because that's what it's for. If you need to go and buy something and you want to actually use your Bitcoin savings and use your proof of work for its intended purpose, there are opportunities to, like, there's nothing worse than selling and seeing the market moon, right? Straight after. It's horrible. It's almost as bad as buying and seeing it sell off. So just getting a vibe for like, well, if I am going to take chips off the table, I want to do it in a way where it's like, okay, it's more than likely that this is getting pretty close. We're in heated territory. I don't want to do another bear market. Some people are getting to the stage in their life where they'll hodl 80%, 90% of their coin, but they can't do another bear market with 100% allocated, right? And you reach a certain age, and I think a lot, when you look at probably your demographics are the same. Millennials are now getting to the point where they can't deal with the same volatility they could 5 years ago, right? In 5 years' time, they're not going to be able to. So you can use this stuff to just like make it easier to know, yeah, it's pretty likely that we're getting hot. Or you then wait for the bottom, right? I use Onchain all the time to buy dips, because I don't particularly want to buy Bitcoin as expensive as I can. And if it looks like it's going to correct, I'll just wait, right? And I'll still buy, but I just won't buy right then and there. I'll just like kind of calm my nerves and ground myself in some data and say, well, it looks like it's probably going to come down to this level. And when this, and this happen, I will do my DCA. So you get the end result, but you get it at a much better price, even if it's on the small term.
Yeah. And what's fascinating too with Saylor is that, like, even though He's a billionaire, very successful guy, has a public company behind him. He had to pay the price of tuition
Oh yeah.
just like every single one of us. And I think that is so unique to Bitcoin because all of these institutions, I feel like they're going to make the exact same. Like this
Oh
is
yeah.
going to run next year and this is going to get bonkers. And
One other thing is that a lot of institutions this cycle, they jumped the horse. They went straight to Ethereum, thinking that it was going to outperform. And I've heard this story from so many institutions. They got rinsed because they didn't. They kind of skipped the Bitcoin's going to go up, but Ethereum's going to go up more. And they bought a bunch of Ethereum, and then Bitcoin went up a lot more, and Ethereum went nowhere versus Bitcoin, down versus Bitcoin. So a lot of institutions haven't learned their lessons. They have to, but everyone has to do it. You have to go through the ringer. There's the only way.
100%. And there's no special class, right? Like everyone plays by the same set of rules and makes Bitcoin extremely unique in that sense. So, James, I think a lot of us, and I'm so glad that we were talking about earlier how kind of the consensus right now is they see the power law, they have PTSD from the previous cycle, and they're buying into the diminishing returns theory. We're going to break 100, 150K. I would like to believe, just because the general consensus is always wrong, I think we might go a lot higher because it'll just going to surprise people. Like, oh, I'm going to sell here at 200K, thing rips up, you know?
Yeah,
that's what
my
Bitcoin
instinct, instinct is that we go higher than people expect, and it takes way longer, like way
Oh,
longer. And I also think so. I think that this like slow and steady grind is real. And look, there's a lot of components to this, but we also have to remember that like within these trade ranges, when you go through the markets go through range expansion to range contraction, which means it rallies and then it consolidates and chops around. Think about consolidations as recharging the fuel tank. That's the correct way to think about a consolidation. And a correction is actually faster. It's like supercharging that recharge. Now, sometimes a correction can get really nasty, and that's why it turns into a bear market. That's why we look at top heaviness. But for the most part, things look really, really stable and healthy right now. But it takes time. And a lot of people are like, oh, I'm really bored in this range. It's like, well, we had 18 months of up only. It just went up for 18 months with no corrections, really. I mean, still, even today, we have only 20.4% is the correction we had at 57K. That's the deepest since FTX blew up. That's a wild stat. So we have added 550 billion. Yeah, $550 billion in market cap this year. And we've added $1.1 trillion since FTX blew up. I mean, these numbers are absolutely astounding. And to only have a 20% correction, we always have like 25, 30, 40, 50%. We've barely had 20. Like we're stair stepping higher. It looks fantastic under the hood. So I think it's going to take longer than people expect. Within these consolidations, we will see a lot. I mean, there's been a lot of discussion this week about the cash and carry trade. During consolidations, lots and lots of trading firms, they'll sell options top and bottom. We've seen options are now as big as futures. So we'll see people selling calls and selling puts. We'll see people compressing volatility. There'll be traders who chop around. Basically, all the market dynamics. And a lot of people like, oh, people are shorting Bitcoin. It's like, no, if Bitcoin gets every asset that has futures has a cash and carry trade. Every asset that gets big enough to justify caring about has a futures market. So these are just part of the world of Bitcoin growing up. Every asset has these, it's of any size. And these kind of, volatility strategies, buying and selling calls and puts, basis trades, all these things, they add liquidity and depth to the books because there's people getting in and out of positions. But it also kind of keeps the market stable for a period of time while it digests. Eventually it breaks out. But a lot of people get chopped up because they think it's over and they get bored and they walk away. But eventually it breaks out, right? And these dynamics are just things we have to get used to. But it does take volatility out of markets. It does compress things a little bit, make it slower and steadier. But remember, I mean, how many people have you had a conversation with where you could not orange pill them because they were concerned about the volatility? Well, here we are, folks. Bitcoin is about as volatile as I think Alex Thorne put out a fantastic chart that shows Bitcoin's volatility relative to like the top 20 stocks in the S&P 500. And it's like, unless it was orange, you wouldn't be able to see it because it's the same volatility as everything else. The barriers that keep these institutions and these firms and stuff from coming in, they just slowly weed away, right? So we're going to be, Bitcoin is going to go much higher. It's just going to take a long time, and that's part of the process. And the hard thing is setting your expectations. If too many people expect a moon mission, they're going to get shaken out. So just correcting your expectations to the world that we're in, and just preparing your patience. Sitting and doing nothing is the hardest part of markets. But there's a great quote by Jesse Livermore, from Reminiscence of a Stock Operator, arguably the greatest trader of all time back in the 1920s. And he basically said, I never made my money from buying and selling stocks. I made it by just sitting tight, just sitting there, owning high quality stuff and doing nothing. But most people can't do it. We are itching. We are itching. This is actually why shitcoins have so many people like, oh, but your coin doesn't do anything. It's like, because they're itching to do something, because they're impatient. They can't just sit there and do nothing. They have to go and keep spending and gambling and all this kind of shit. This is where the high time preference comes from. The hardest thing is to do absolutely nothing and just wait. And that's what the process is currently playing out.
100%. I mean, yeah, I feel the boredom. You kind of feel it, and you feel it in the air, so to speak.
Twitter's eating itself, and we're like 5% off all time high.
Yeah, no, it's like, it's like, yeah, we're at all time high, but it's like, I feel nothing now. James, what is, like, you're saying this time it's going to take longer. So what does that mean? Are you seeing, 12 to 18 months from now? Like, what is the consensus for, or like, what is, how are you seeing, what are you defining as it might take longer this cycle?
Yeah, great question. So and you'll very, very rarely see me do this. I don't really say, some people are like, the all-time high is going to be in 12 months. I have no idea when the all-time high is going to be. The all-time high, I reverse the whole equation. People say, the all-time high will be in 12 months and it will probably be around this price. I say, show me what the market is doing and I'll tell you whether it looks like an all-time high. That's the way I reverse it. I basically say, show me the mechanics. Show me when the structural under the surface. Show me when too many people have bought too many coins at too high of a price. When I see those conditions, then I'll look at the date and then I'll look at the price and I'll be like, okay, that looks like a top. That's more likely to be a top. So I try to reverse it around. So in terms of how long it's going to take and what price we're going to get to, I have no idea, but I'm excited to find out.
Are cycles still a thing? Do you still foresee cycles playing a role in Bitcoin?
Great question. That's a great question, actually. So that was one of the only narratives that everyone wrote off and said there will be no more 4-year cycle last cycle, right? So in the last cycle, it was like 4 years done. It's over. It was the only narrative that survived, right? The 4-year cycle. So whilst I just said that, I will look for the conditions, and that is like my base case, I simultaneously go, well, the 4-year cycles have continued to work, and I will wait until they don't work, right? So I'm on the side that it's more likely that they continue, because the other thing about bull markets, in the current market we're in, this boredom shakes people out, but it's very, very sustainable because new money will come in, big money gets more comfortable. This thing can just stair-step higher. Once we move into the euphoric phase, which historically speaking is when we're at a new all-time high, so we could be on the cusp of euphoria, but we kind of were at 73, but that's really calmed down quite a lot. So maybe we have to get to 80, or maybe we have to get to 100. I don't know, before euphoria kicks in. But when euphoria kicks in, then you're on a bit of a timeline. And the reason why is that you may have experienced this in the previous bull. If you were there, you get tired. Just the up only, the chaos, you're checking the price all the time. You're on Twitter. It's exhausting. It's tiring. Markets are like that. Markets can't deal with, like, an unstable equilibrium. So when you move into the euphoria phase, you can see it in on-chain metrics as well. People's profit and loss is chopping around like crazy. It's bananas. It exhausts you. So if we go quiet and trending, the longer this quiet and trending goes, this can just keep going, right? The stock market is this, just 10 years of just climbing. Once you get into the real volatile upside, that's when you're on a bit of a ticking clock, because the market just can't handle that for so long, because it gets tired and worn out.
Damn, man. It's interesting.
It is. Markets have this resonance. They move within these different regimes, and we can see. I love to look at like MVRV. One of the oldest metrics. It's essentially everyone's profit and loss, unrealized. So the profit and loss you're holding, and you'll see that during this phase, right, 2015 to 2016, 2019 up to 2020, 2023 to now. It's just this like everyone's profit and loss is just slowly getting better, just like crawling higher. Once you break the all-time high, people are bang right into profit, bang, oh shit, bang it, like it gets you can see it in the oscillator, it gets volatile. That's what chops people up. Some people are like, yes, I'm in trader's paradise. I'm going to buy that dip. I'm going to sell that rip. Someone else is like, I'm going to rotate into a shitcoin. And then eventually the whole thing just done over because you can't sustain it.
Oh man. And then just it just comes, and then the hangover starts, and oh man, this is
the hairy back.
This is crazy. But again, it's, you have very powerful institutions that are kind of a part of this now, which is, I find fascinating. Anyways, there's some questions from the audience that I wanted to ask you. So first off, this last cycle was really interesting. We just hit basically the all-time high before the halving. And then we also hit the previous low. So like the 17K was lower than the previous all-time high, which has never happened in Bitcoin's history. So were we kind of seeing things that were not there? Was that one of those laws that, you just mentioned, the halving one that hasn't broken yet? That was one of the laws last cycle that it hasn't broken yet, and it broke, and it really is of no consequence? Or is there a deeper meaning there?
No, there's no meaning to it. People like to assign that stuff. It's like, oh, all-time high before halving. It's never happened. It's like, yeah, but we've also got 3 data points that we're comparing it to, right? So it's not a long-term thing. They're very easy narratives that people kind of anchor to. One thing I will say though is the bottom, from a structural perspective, from a mechanical perspective, you may remember that Luna sold us off down to 30K, and then 3 arrows blew up and we went down to like 17, I think we hit. That's when the bottom started forming, on that first sell-off when 3 arrows blew up. So we traded sideways. That would have been June or July 2022. And we traded sideways until I think November was FTX. So that whole period was actually very, very bottom forming. FTX collapsing was like a hyperextension. It wasn't kind of the intended result. We would have probably, if FTX hadn't blown up, we actually would have bottomed, I think, in around that range and then kept going. But FTX was like this, like, and we did. We went, we basically just this like little box out, like an inverse bar. So that FTX was a bit of a hyperextension to the downside. But also, and when we talk about like how we took out the previous all-time high on the low side, I got a chart that I love it. It's one of my favorites. It's about the shrimp, and it looks at their 90-day, how much their balance has increased. And it's an amazing chart because it actually shows the success of Bitcoin's education. So let me describe it. It's basically an oscillator, like a wave, and it's showing you how much the shrimp added to their balance. The biggest peak for a long, long time was the tippity top of the 2017 peak, the 20,000 top. And that was me. I bought there. That was my first coin. I bought the absolute top tick plus a fee on Coinbase. You couldn't have bought higher than me. And then I got rinsed. What I did start doing is listening to the new podcast. And there was an explosion in high quality Bitcoin education, right? You lived it as well. The amount of high quality Bitcoin education from 2017, let's just say up until Michael Saylor bought in 2020, that phase, and even beyond, it's a whole different world. So now the shrimp know what they own. So we never saw that same level of buy side from 2017 at 20,000 until 2022, when we reached 20,000, but in a bear market from the other direction. And the shrimp, their wallets exploded. They started buying like crazy when 3 arrows blew up. And then when FTX blew up, they went even ham. So you've got these like 2 peaks that blew out the previous all-time high. So what does that tell you? That tells you the shrimp aren't as dumb as they seem, because not only did they buy the bottom, the exact bottom in the biggest size we've ever seen, they also sold on the 2021 rip, and they sold into the ETFs, right? Not a lot, but enough to prove that the shrimp are actually smart money. In every other market, retail folks are the dumb money, right? The institutions look at retail folks as the dumb money, and they are there to take money from the casino. In Bitcoin, the shrimp actually know what's up. And I've seen this chart. I love it. I think it's one of the most amazing things. It just describes how good the Bitcoin education machine has become, because everyone watching here, you know what you own and you know why you own it. And we can see it in the data, right? You're ahead of Wall Street. You actually know what's going on way better than them. Trust your intuition, trust your instincts, because you're better off than they are.
Oof. Oh man.
Solid,
James, dropping the mic. dropping the mic, man, dude. Yeah, and Wall Street might be the dumb money this cycle.
Oh yeah,
they might
they're
be
holding ETH. They got minced.
It already happened. Oh man, great. All right, so we are getting too close to the top of the hour, so it is towards the end of the show, and there are some guests that I asked them this question, and depending on who the guest is, some feel comfortable in answering it, some don't. But if you are to put a number, and I know you're not supposed to do this for Bitcoin only podcast, but I'm gonna totally do it anyways. If you are to put a number, and I'll go first if that sets the tone. If you are to put a number on the previous top, which you said so elegantly, you have to see the data before you even tell everybody where it's going to be.
If we're going to take a punt, yeah.
If we're going to do it, if we're going to kick a kangaroo in the balls, we just got to rip it and do it, right? And then run away and hope it doesn't tear your head off, metaphorically, YouTube. Yeah, I mean, I'll say first, I would say between 250 and 300. That's what I.
Yeah, that's where I think. That's where I think we probably settle. And there's a few reasons for this, right? So I've got two. That's my like instinctual 250K is probably where I think we probably deserve to reach some kind of a plateau. However, when people actually ask me what is my price prediction, I do a very simple piece of calculation. How many bars of gold are there per Bitcoin? Right now it's 10.8 kilograms. What's 10.8 kilos worth? I don't know what it is in US dollars, probably like 750K or 1.2 million Australian. So that's my price target, right? What is Bitcoin worth? Well, it's better than gold, so it should equal gold. So therefore 10.8 kilos of gold is the price. Whatever 10.8 kilos of gold is, that's where we're headed. So that's like the long-term view. In the short term, because as I said, it takes time to get there. It takes bull markets, bear markets, crab markets, sideways markets. It's a process. In order to get to 10.8 kilos of gold, we're probably going to bump our head up around, I don't know, 3 or 4 kilos, right?
Oh, man. Woo! Oh, man. I can't. Well, it's just making me feel bullish. And, I agree. Look, it is superior to gold. I mean, you had Similar Scientific come out, and some of their logic that they used in the press release is, this is better than gold. It's going to 10x, and they put gold in the press release. So yeah, I completely agree, and I think it's just a matter of time before the world wakes up to that reality. So
and it's funny because I've bought physical gold, and I went through the process, and I can assure you, it is more than 10x improvement.
Yeah, I mean, but again, it's because we're trying to be conservative, right? It's like it's at least going to do this. But that's the base case. That's the base case that everyone has to remember, right? But James, thank you so much for joining us on the show today. Really appreciate it. Guys, go check out checkonchain.com. And also, if you had any last words for our guests in the audience right now, there's currently 736 people watching live between YouTube and X. If you have any last messages for the audience, what would it be?
Yeah, I mean, I think the thing with on-chain data is that it's us. It is us, right? We create the on-chain data, our transactions, our buying, our selling. It's not like, yes, there's a little bit of proof of work you got to do, but it's actually not as hard as people think. The idea is you're trying to just help yourself navigate, ground yourself in some very simple data. Let Bitcoin tell you what it's doing, because the news and the media, and one of my favorite lines, I love watching the narrative on Twitter not happen in the on-chain data, because it's just such a great tool to filter out the noise. It's very easy for people to get stuck on the narrative. This kind of data it's not as hard as you think. My process is trying to simplify it for people, but it can help you navigate the volatility, because whether you're a hodler or whoever, it's hard. It can be hard. If it rips, if it sells off, the biggest feedback that I get from people is, I don't care, because I know why it happened. And when I know why it happened and I was prepared for it, it helps me hodl. And that was like the original thrust. I had so many people tell me that feedback. I'm like, that's the service. Help people hodl. Help them navigate this shit. They know they're not selling. They're going to hang on forever, but they need to understand why things happen, because it makes it easier. So you're not, itching all the time to be like, oh shit, is that the top? Is that the bottom? Should I do something? Should I not? Like, you can smooth that out by just understanding what's going on.
Amen. Amen to that. Well, James, thank you so much for joining us on Simply Bitcoin IRL. Really appreciate it. Guys, go check out his website, checkonchain.com. I'm going to put it in the video/podcast description as well. James, thank you so much for coming on. Really appreciate it.
Thanks, mate. A lot of fun.
Thanks, man. All right, guys, that was our show. If you enjoyed the show, you know what to do. Smash the like button. Consider subscribing if you feel like we provided you value. But we'll join you on the live show tomorrow, 12:15 p.m. Eastern Standard Time, for another episode of Simply Bitcoin Live. Peace out, everybody. Have an amazing evening.
Episode was brought to you by BitcoinWell.com, on a mission to enable independence.